Yang berbahagia, Datuk Iskandar Muhammad Nuli, Executive Chairman Labuan IBFC Inc., Mr. Roy Suresh Sharma, Chairman of Labuan International Insurance Association, Datuk, friends from overseas, distinguished guests, ladies and gentlemen. Assalamualaikum warahmatullahi wabarakatuh and a very good morning. I wish to welcome once again to the 6th edition of the Asian Captive Conference 2023. It is a privilege to join you in this momentous occasion with the theme, The Connected Risk Journey in Self-Insurance, which aims to assist risk professionals in navigating their risk journey at critical touchpoints in a changing risk landscape. Your presence here is a testament to the prominence of this event, and we are pleased to have all of you with us today. As we recap the events of past 2 years, it is impossible to discuss the current state and prospective growth of the global insurance industry without addressing the highly uncertain macroeconomic and geopolitical landscape. From the lingering effects of the pandemic on global workforce and supply chains to the war in Ukraine and rising tensions between major global players to soaring interest rates, rising inflation, and fluctuating currency valuations, the entire insurance industry has been forced to reevaluate its fundamental assumptions. This year, the world faces new and familiar risks. The return of conventional risks such as inflation, cost of living, crisis, trade wars, capital inflows, outflows, social unrest, geopolitical conflict, and nuclear warfare, just to name a few, has been experienced by many, many business leaders and policymakers in this generation. New global risks such as unsustainable debt, low growth, low investment, deglobalization, declining human development, rapid development of dual-use technologies and climate change pressures are amplifying these challenges. Together, these are converging to shape a unique, uncertain, challenging decade to come. And I didn't mean to paint a very gloomy environment this morning. In the past 2 years, as the world has adjusted to living with COVID-19, many changes have occurred, and Malaysia has not been spared. The pandemic has had a significant impact on its global economic prospects, and Malaysia has proven its resilience in the face of numerous obstacles stemming from the health crisis. As a result of the easing of mobility restrictions, the recovery of economic activity, the improvement of employment conditions, and the increase in commodity prices, the nation is reaping the benefits of economic rebound and is on a solid path to recovery. Based on the central bank's recent report, Malaysia's economy expanded moderately by 2.9% in the second quarter, and this growth was weighed mainly by slower external demand. In fact, if you read yesterday's news, they were all very pro-growth. Domestic demand remained as a key driver of growth, supported by private consumption and investment. This is anticipated to continue throughout the remainder of 2023, and there should be a silver lining from the increase in tourism activities and positive sentiment from the initiatives under the Madani economy. These initiatives under the Madani economy have the potential to bring a positive change in Malaysia by adopting a strategic and value-centered approach, especially during a period of domestic and global uncertainty. The emphasis on innovation and inclusiveness in the Madani economy framework reflects a strategic vision aligned with advanced and resilient economies, positioning Malaysia at the forefront of technological advancement and providing opportunities for all sectors of society. Ladies and gentlemen, let me now turn to the latest development in Labuan IBFC. Despite the challenging global financial landscape, Labuan IBFC continues to forge ahead its business expansion in 2023. Labuan IBFC is now home to 237 insurers and insurance intermediaries, including 71 captives. As of the second quarter of 2023, The total gross premium of Labuan insurance industry was recorded at $1.1 billion in comparison to last year of $937 million. A total of $408 million worth of premiums were underwritten by Labuan captives in the first half of 2023, and about 63% of this premium were from the international market and 37% from the domestic market. In fact, the Labuan captive market share accounted for 39% of the entire insurance industry in the Labuan IBFC Center. This development is well supported by the global demands, resulting in a growing interest in multinational insurance, a fully end-to-end customized service for organizations, cross-border exposures, including risk transfer and captive services, which means there will be increasing exposures in an ever more connected world, and more organizations than ever before are using captives as a valuable risk management tool besides its cost effectiveness. In addition, we saw the increased interest in captive formations and greater use of existing captive insurers in 2022, which will likely continue through 2023, based on the Business Insurance Report. Captive growth has continued to be robust, and the growth has been across industries, risk covered, and domiciles. On this note, I am pleased to add to what Dato' Iskandar has mentioned, to announce that Labuan IBFC made its first appearance in the recent report under the World Domicile Update published by the Captive Review, that Labuan is ranked among the top 10 captive centers in the world in terms of numbers of growth, alongside captive centers in the US, such as Connecticut, Oklahoma, and Texas. Key to Labuan IBFC's sustained growth is its well-regulated business environment, which gives investors confidence to continue utilizing Labuan IBFC. Labuan FSA continue to bolster the competitiveness of Labuan captive business in accordance with the 5-year roadmap, 2022 to 2026, which charts continued development and builds on existing strength to be one of the leading captive centers, including Takaful Captive, to which we have a few. Together with the Labuan IBFC industry and other stakeholders, we have identified priorities and key approaches that will guide our efforts to promote the development of Labuan captive insurance. This will include formulating omnibus captive policies to ensure comprehensive business offerings. Secondly, intensifying market growth of Labuan insurance through targeted market promotion. And thirdly, fostering greater collaboration with other target international insurance markets through forging new partnerships. In response to this, Labuan FSA has recently issued the revised guidelines on captive insurance with these following objectives: to provide better clarity on captive structure and operational requirements for rental captives by 1, establishing a new captive structure, namely External Rent a Captive or XREC, existing subsidiary Rent a Captive or SREC. Features are similar to XREC, so SREC is similar to XREC. I hope you can follow me. The only distinction is that Master Rent a Captive or MREC offers less than half of XREC's shares. I believe there will be a presentation in the afternoon to make clear of what I've just mentioned just now. 2, introducing requirements on the roles and responsibilities of the board and senior management of MREC and protective cell companies, or PCC, in managing captives under their care. In line with the temporary relief granted for the establishment of a cell under a PCC that requires notification instead of approval by Labuan FSA, the notification will continue to be permitted under the guidelines. Second objective is to expand the insurable risks of Labuan captives to include indirect insurable interest risks. It is anticipated that the expansion of insurable risk under Labuan captives will further support the industry's innovation and cater for the needs to deal with current global issues. Labuan captive insurance has demonstrated an outstanding track record. This demonstrates the increasing maturity of the Labuan captive sector, as the aggregate premium underwritten by the Labuan captive segment has been steadily increasing, primarily from Asia. With strong financial fundamentals, Labuan captives will not only sufficiently be resilient to withstand external disruptions, but also have the capacity for greater retention. Ladies and gentlemen, Labuan FSA will continue to emphasize on the players to be innovative, responsive, and supportive at the forefront of technology. This includes the underwriting of new or emerging risks, particularly in the digital era, such as cyber risk, digital asset risk, data protection risk, and technology risk, as well as the development of guidelines to protect the conduct of digital business, digital governance, cyber risk management, and AML-CFT compliance. Labuan FSA will continue to promote captive insurance throughout the implementation of a number of business development initiatives. In light of the dynamic changes in the environment over the past decade, we will continue to strengthen regulatory and supervisory measures to promote the Centre's orderly business expansion and market stability. In this regard, we are fostering greater collaboration at the international front through an MOU arrangement between Labuan FSA and the Bermuda Monetary Authority that was implemented in September. Bermuda is the largest captive domicile in the world, with more than 800 operating captives. We envisage Labuan-Bermuda partnership will create strong synergies between both jurisdictions and intensify the momentum for Labuan's agenda in becoming Asia's captive market of choice. Labuan IBFC will continue to provide a truly robust, diverse, and well-regulated ecosystem, and that's my commitment to you and the wider market at large. With that, I would like to conclude by thanking the organizers for inviting me and wishing everyone a productive conference. Thank you very much for your kind attention.